Shares of Coinbase trading a little higher following news that the company is set to lay off 20% of its workforce. That affects about 950 people as it grapples with a downturn in the crypto market since the collapse of FTX. Mizuho Managing Director and Senior FinTech Analyst Dan Dolev is joining us now. Dan, you downgraded the stock to an underperform about a month ago. You had been neutral on it for long before that. When do we get a table reset for Coinbase? What would it take?
Miracle.
I guess cutting 20% of the workforce is not a miracle.
No, and I don't think it's enough. I actually think so. We did some math around it. So they're going to be saving about $250 million per quarter. That's $1 billion per year. This is not the problem, right? So we've been the street bear on this one for a while. The problem with Coinbase is that their business is troubled. Their business model is defunct, right? So they make money off of retail trading. And because of the crypto ice age, retail trading is basically non-existent. So at the current volumes that they're running, about 1.2 billion a day, there's no way they can cover their costs. So I expect actually more pain in 2023. I don't understand why the stock is up today. I really don't.
Dan, in the non-trading related revenue streams that I believe we talked about at the tail end of last year with you, where do you believe that they'll actually be able to kind of drive some of that demand generation in order to ensure that within each of the cost-cutting measures that they're implementing, that on the other side of that, there's an equally balanced kind of run rate that they can kind of march towards that investors can hang their hat on?
Sure. Yeah. And you're talking about the SaaS, the so-called SaaS revenue, right? The software and services revenue. So, this is a huge uphill battle. I think we're modeling, roughly, just under $1 billion for next year. The run rate right now is about 700 million. I mean, I think that the fallacy of this thing is that people are looking at it in a silo. It's highly correlated with crypto retail trading volumes, which means that if our prediction that crypto retail trading is basically going away and the fees are going away, I think you'll see those those SaaS revenue related stuff going with it. So it's reinventing the crypto economy, which is like pushing a 747 jumbo jet up the hill. I mean, it's a very hard earned revenue, and I don't see much. I'm not very optimistic about that revenue stream at all.
Dan, the last time we talked to you, we were talking a little bit about Robinhood, I believe. Do these cuts from Coinbase, what does that mean for Robinhood? Do they have to cut further?
Robinhood is actually in a great position. I mean, I met with Vlad, and I think we talked about it last time. I met with Vlad in November in Palo Alto, and they're basically beyond the big cuts. They're now, basically making much more, or losing less money, so to say. And the good thing about Robinhood is, remember, like crypto is only one facet of this whole, revenue stream. And the trends are actually looking good. If you look at the November trends, December trends, they're actually looking good. So they're on a good trajectory, and they're coming up with a bunch of new products that are non-crypto related, like the state, like the retirement, et cetera. I'm very, very optimistic about Robinhood. I could not be more bullish about Robinhood and could not be more bearish about Coinbase at this juncture.
With regard to the vacuum of just confidence around crypto projects more largely, and when that could actually come back in enough force for these companies, for Robinhood, for Coinbase, even for a Square and a Block and a PayPal, to also see some type of rising tide. I mean, how long would you predict that this crypto winter continues to last and really have that impact on sentiment from new and even existing holders or hodlers?
I personally don't think that we're going to get to see, I guess on Wall Street, the new thing is a year as a career. I hope it's a little longer, but I don't think that in our, I wouldn't say in our lifetimes, but I don't think in the foreseeable future we're going to see that super bubble, that COVID-infused super bubble that we saw with crypto, where everyone was trading. I don't think we're going to see that. I think it's all sort of backward looking. Those are the relics of an era that's not coming back. I think it's kind of over for Coinbase. I mean, sad to say that, but I think it is. By the way, Block or Square, that over focus on Bitcoin, I think is a big mistake. And also the change in the name, but that's a different topic.
Dan, when you say it's over for Coinbase, so are they not around in a couple of years? Does somebody come in? Are they part of another larger company?
I mean, I think it's over from if you think about I'm thinking for the business model, I think it's over for them, right? Because remember I can't predict whether or not they'll be around or not and how much cost cutting they can do, but think about how they make their money. They make their money on charging very high retail trading fees. And if I think about where that is the trajectory of where this is going, it's getting worse and worse every day. And I don't see that changing. I don't see the Dogecoin kind of, hyper bubble coming back anytime soon. So could they be part of a bigger, different company? Potentially, but I can't predict it. But I think their business model is very, very challenged. And I think it's getting worse, not better.
Mizuho Managing Director and Senior FinTech Analyst Dan Dolev, always good to see you. Appreciate your analysis.